Warren, it's great to see you.
Great to have you here.
Yeah, you are getting ready for the invasion.
The invasion, yeah.
Everybody coming in. How many people are you expecting this year?
We sent out a record number of tickets by just a couple percent, but our previous record was at the 50th anniversary of taking over Berkshire. It was 3 years ago, and then it dropped after that, and Yahoo started broadcasting. This year we set a record that beat the 50th anniversary. So we think we had about 42,000 people at that previous record, and if the attendance is proportional to tickets, we'll be up slightly.
What do you look forward to at this meeting?
Everything. No, I mean, it's. I just left a dinner with all the managers, and I love seeing them, and we all talked a lot, and I like the shareholders, and it's nothing but fun.
Is there anything different this year? Anything special that you're thinking about, or anything that the shareholders would notice that are different?
Yeah, we're here really to respond to them. Charlie and I are. We want to talk about what's on their mind. I do have a little change in the format on Saturday, where I think I'm going to give them a little lesson, perhaps at the start, that might be useful to them. But we'll see what happens.
Well, there's a curtain raiser for you. When you just came from a dinner with managers where you and Charlie were interviewed in front of all of them. When's the last time you saw Charlie?
Last time I saw Charlie was at the off-site directors meeting in October last fall. I don't get to Los Angeles much. Charlie doesn't come here anymore. I mean, there was a time actually when his mother was alive, he spent more time here, and he. But I used to spend a good bit more time in California, in Southern California. So we may only see each other perhaps twice a year, maybe 3 times a year.
You don't rehearse anything that you're going to talk about on Saturday, do you?
No, zero. No. I saw him tonight because we met, and I may not see him again until we walk down our separate aisles to go up on the stage. No. We are unrehearsed under any circumstances.
Just thinking about what's happening, and Berkshire's always such a good gauge of what's happening in the economy, not only because of the businesses you own, like the utility company, and because of Burlington Northern, but also because of all the holdings you have in so many other companies. What would you say the economy looks like to you right now?
Well, right now, I mean, I don't know what the future holds, but business is pretty strong, generally. And that's true, I think, worldwide. If you look at our international metalworking companies based in Israel, they sell little tools that go into big tools, big machine tools, and they sell them worldwide. And nobody is buying them to use 2 years from now or 1 year from now. They're buying them because they're using those machines to do punch holes or do whatever they may be doing. It's very much a current consumption type operation, and that is up significantly worldwide. I mean, one continent after another, and it has been for 4 or 5 months. And if you look at electronic components, we have a subsidiary that's a huge distributor of those. And again, worldwide, not just in the United States, but Asia and Europe as well. We can't fill the orders fast enough. So business is certainly it's better. It's better than it's been, and I don't know what that means for 6 months from now. But car loadings are up in the rail industry and so on. So.
First quarter GDP was 2.3%. That was higher than expected, but we also had a lot of economists like Ian Shepherdson say that you should add 0.9% to that because the first quarter has had this weird thing going on for years now. If you were trying to put a finger on it, is 2.3% sound right for the U.S. GDP? Should it be 3%? What does it feel like?
Well, all I can say is if the last 7 or 8 years have averaged 2% roughly, it's stronger than that right now. I mean, but there's no way to calibrate it through, and they have their own problem with seasonal adjustments, as you point out in the first quarter. They've apparently got the wrong seasonal adjustment, but they've had years to work on it. They still can't get it solved. Right. I would say that the Berkshire Hathaway index of activity, business activity, is stronger than it's been, and it's been improving year after the financial panic.
We just heard from some companies in the last couple of weeks that you're a big shareholder in, that Berkshire Hathaway is a big shareholder in. Apple came out with earnings this week that were better than expected. iPhone sales were still a little weak. The street loved what they saw. What did you think?
I like what I saw too. Their surprises. I mean, it is an unbelievable company. I mean, if you look at Apple, I think it earns almost twice as much as the second most profitable company in the United States. It's a wide gap. I mean, it's an amazing business. I mean, here's a company that's, whatever the earnings are, 60 billion or whatever, and you can put all their products on a dining room table. I mean, that's not the way it used to be in this country.
There were a lot of doubters on Wall Street before those numbers came out this week. Were you in the camp that was a little worried about what was happening?
Well, we don't own it for the next quarter. I mean, it is incredible to me how you read the investor conference calls after reports, or you read all the analyst reports, and they talk about what it's going to do next year. Nobody buys a farm based on whether they think it's going to rain next year or not. They buy it because they think it's a good investment over 10 or 20 years. So the relevant question when you're looking at buying part of a business, what you're doing when you buy a stock, is where's it going to be in 10 or 20 years? It may be that you don't know, in which case you don't have to do anything. But the idea of spending loads of time trying to guess how many iPhone 10s or whatever it may be are going to be sold in a given 3-month period or something, it just, to me, it totally misses the point. I mean, it was like worrying about the number of BlackBerries, 10 years ago, and then what really counted was what was going to happen over the next 10 years.
Right. So the shares sold down before that, heading into it. Do you like the stock? Have you bought more of it? Do you think that that's another place you want to be?
Well, I don't talk about what we're going to do, but our 10Q is coming out on Saturday morning, so they can actually figure it out from looking at the footnotes in there. We bought quite a bit more Apple in the first quarter, at the first calendar quarter of this year. It's their second quarter fiscally.
More than you had reported in February when we got the SEC filings. I think it was 163.5 million.
Well, that's what we had at year end.
Yeah,
I think we had something like that.
That was the February 14th figures.
Well, that was probably, that was reported on February 14th. I think that was as of December 31st. And I think it counts our pension holdings too, maybe. But you're right, we had 160-odd million shares in Berkshire.
Wait, so you bought a lot more in the first quarter?
Quite a bit more, yeah.
I mean, you own a lot already, so when you say a lot more...
Well, it'll come out on Saturday morning, and so it'll be reported, and we're not going to be active now. So you'll see it went up about 75 million shares.
Wow. Okay. You had gotten rid of most of your IBM shares as of the year end.
Right.
You held a little bit. Do you still have those?
No.
Meaning you have 0 IBM shares right now?
I think we have 0. Right. Yeah. Yeah. The answer to that, I'm almost certain is yes.
Wow. Warren, let's talk a little bit about a move that has
We'd sold almost all of it by that point. So
right.
We have not had massive sales or anything.
No, you were down to like...
It was finishing up.
Right. I think you had sold off 94.5% of it before.
You've got that figured out.
Well, I was looking through all your numbers on all the things that you've done. Can I ask about Wells Fargo? Is that a situation where you've sold any shares?
Well, there's several companies like this where we're right at the 10% level. So if they repurchase shares, we try to anticipate that just by 0.1% or 0.2%, because we do not want to go over 10%.
Particularly in bank holding companies.
Yeah, well, that's certainly the most dramatic example. We also sold a chunk of Phillips to bring us below 10, and we announced that at the time. So with something like Wells, we want to stay just below 10. So that involves selling minor amounts of stock, but it's only to be below 10%. We've not sold anything of a discretionary nature.
Okay. I did want to talk to you about USG because I was surprised to see that Berkshire voted down the idea of the 4 directors, that did not vote with the company on that. That is something that's so rare. I think you own something like 31 or 32% of USG, and to see the largest shareholder not going along with these 4 directors who were standing for re-election. What happened?
Well, You're correct. We owned about 30% or something like that, and we had owned it for 18 years. Well, we hadn't owned all of that, but we'd owned a good sized piece, and we had twice come to the aid of the company in financing when they needed to come out of bankruptcy in 2006, and then when that money that they raised then got hit by the housing, total free fall. 2008 they needed more money, and we came up with it, and so we've been in it a very, very long time. And it's true that I can't think of a time. There may have been one that escapes my mind that we voted against directors, but we did not think that they'd responded properly in terms of not sitting down and at least talking to Knauf, who also has held their stock for 18 years and owns 10 or so % of the company, and we did not think that the directors were essentially doing their job. So we said we intended to vote against that. We don't have any rival directors running against them or anything of the sort, but we did vote against them.
The company has since, and USG has said that it is going to sit down and talk to them. It thinks that the $42 that Knauf is offering is not a fair bid. What if they don't reach an agreement?
Well, we'll see what happens then. But I was very pleased that the directors decided to do that. So I think they've responded properly.
And have you talked to the USG CEO?
She called me a few days ago. I can't remember exactly when, but I'm not sure which day it was. But we had a very cordial conversation. It was after they announced they were going to sit down, and she did call me then, and it was a very friendly call.
Okay. I know you're about out of time, so I'll quickly throw a couple other things at you. At the end of the year, you said you had a cash pile of about $116 billion. Where is it now?
Well, it's a little less, but I would estimate that it's a little over 100 billion. We bought more stocks by a considerable margin than we sold in the first quarter, which is usually true, not necessarily by a considerable margin, but we are usually a buyer of stocks. And in the first quarter, the Apple alone, I mean, you can figure it out. They were talking 12 or 13 billion dollars or some number like that. And so it brought down our cash position moderately.
It still leaves you with a pretty big pile of cash to put to work. There have been people speculating that you might buy General Electric or some portion of General Electric. Is that something you can comment on at all? Is that something you're interested in?
I'm in an awkward position because the answer is we're not doing anything on that, but I'd have to say that even if we were. So, I actually admire John Flannery and what he's doing. He's got a very tough job, but he's just doing it very logically. And I'm very familiar with GE, and we do a lot of business with them, both on the buying and the selling side. And it's a terrific American company from way, way, way back, in the original Dow Jones average. So I want the company to do well.
Great. Warren, I really appreciate your time, and I don't want to take any more.